Red FM and Mining Tomorrow. Ian Kennedy here. Each week we do put a different resource company under the microscope, get to talk to the heavies along the way. And today we're talking to Barra Resources. Sean Gregory is the Managing Director of Barra Resources with the ASX code of BAR. I reckon that's a great code to have. How are you, Sean?
Yes, very well, Ian. Thanks for the opportunity.
No, great to talk to you, and thanks for giving up some of your time. Now Barra Resources is a dual commodity company, so that's a little bit different. So you're in the cobalt nickel area and also gold. What's behind that strategy?
Yeah, that's right, Ian. Look, Barra was first listed back in the year 2000 on the back of our gold assets. They're fabulous gold assets around Coolgardie, old gold mines that have been in and out over the years, including under Barra's stewardship. Very high-grade mines, 420,000 ounces have come out of those mines at an average grade of 18 grams per tonne. But the reason why the strategy's worked quite well for us is that those gold mines have been a pretty useful source of cash flow over the years. There's been quite a few occasions when equity markets have been very tight, and we've been able to get our money out of the ground to fund our exploration and development rather than having to tap shareholders. But we're balancing that against, in more recent times, we acquired this cobalt nickel project, Mount Thirsty. We've got a 50% interest in that with our partner, another ASX junior called Conoco. And the two projects nicely balance each other. Mount Thirsty is a real big elephant that's got the potential to deliver hundreds of millions of dollars of value, and the gold's got really the potential to fund the studies on that work. And we also notice these commodities move in different cycles. Cobalt was the darling of the market last year. It's come off a little bit, but we still think it's got a very bright future. And then gold, on the other hand, is now pushing through $2,000 an ounce. So they're a little bit counter-cyclical with each other and give us plenty of fodder to keep investors interested in the company.
Well, as you say, gold hovering around that $2,000 Australian an ounce puts a smile on your face, and it looks like it may even continue to go with a bit of luck. So that makes the gold assets again viable, Sean?
Look, we're hoping so, Ian, and certainly I proudly proclaimed this time last year, stood up at a conference and proudly proclaimed that we didn't want the management distraction of a small gold operation, and that we had a strategy of building those ounces up into something more sustainable, up towards 500,000 ounces. But, you know, with gold price, all strategies, we've got to bend with the wind, and with the gold price where it is, we're just revisiting that strategy and seeing if there is some short-term mining operations that could deliver some cash. We did some drilling out of a place called Burbanks North, and that's going to result in a JORC mineral resource. We're just putting the finishing touches on that, and that'll be available to the market very shortly. And that could be a little open pit operation, and that would complement the existing underground resources at Burbanks. There's about 125,000 ounces at about 5 or 6 grams of underground resources at Burbanks. And between those two deposits, we could have quite a handy little mining operation ahead of us. But look, we're going to investigate that carefully and diligently, and as well, we've also got to be careful. We haven't got stars in our eyes. Any development is likely to require a partnership with a tributor or a mining contractor of some sort. So, yeah, we're actively exploring those opportunities, and that could be there could be some interesting news just around the corner on that front.
We're speaking with Sean Gregory of Barra Resources. Now, on the other side of the coin, Sean, the cobalt assets, where does that fit into, like, the electric story that's around with the batteries and stuff?
Yeah. Look, Ian, electric vehicles, they're real. They're here. You can see them driving around Perth, but I think Australia is a little bit behind the eight ball. It's actually the rest of the world that's really embraced electric vehicles, and many countries around the world have set themselves timeframes to actually ban internal combustion engines so that they can improve the quality of the air in their major cities and so forth. Up in China, for example, 4% of the vehicles they sold last year were actually electric vehicles. And China is a huge market in all commodities, we know that, but particularly in vehicles. 20 million vehicles is the total market in China, and as I mentioned, 4% of them last year were electric vehicles, and they've set themselves a target for the current year of 12%. And when the Chinese central government says they're going to do something, you can be assured it's going to happen, and they'll move towards 100% electric over the next decade or so.
Mm-hmm.
But cobalt, we all know cobalt's required for electric vehicles, for batteries. You're going to need a lot of metals for batteries. You're going to need lithium. You're going to need manganese. You're going to need nickel. You're going to need cobalt. You're going to need all of these battery metals. But when you look across the space of those battery metals, most of those metals are pretty abundant and can be readily accessed. Cobalt, however, is a little bit different in that it's scarce. Very small market, only 130,000 tonnes. And of that market, 99% of it is actually a byproduct from nickel and copper mines. Right. So there aren't too many cobalt mines, pure play cobalt mines, that are queued up ready to meet demand. And the other aspect that makes cobalt really interesting is that 70% of it actually comes from the Democratic Republic of Congo in Central Africa. Yep. And that's subject to all sorts of supply disruptions, and indeed there are some ethical challenges there with some of the artisanal mining that a lot of your major companies are starting to turn away from. So all of these dynamics point to a fabulous story for cobalt. But despite that, the cobalt price has actually come off recently. There's a lot of physical stocks around for cobalt and a bit of speculation. A lot of people came into the cobalt market last year, created a bit of excitement, and those guys have left the market and left us with cobalt at a bit of a low at the moment. Mm-hmm. But we really see that as a buying opportunity. We see that as an opportunity to invest in cobalt. And when cobalt inevitably bounces back, we're going to be in a very strong position with a great story around our Mount Thirsty project.
All right. Well, speaking of Mount Thirsty, Sean, what makes that different to other cobalt projects that are around?
Look, Mount Thirsty, number one, it's located in our fantastic stable mining jurisdiction of Western Australia. It's only 16 k's from Norseman, and we've got a fabulous, supportive state government and local governments, and they're really keen to see regional development. They're keen to see jobs created, and indeed they've identified the battery mineral space as an area to create a new industry in Western Australia. But not only that, our project's also got some technical advantages. Typically, for these mines in Western Australia and around Australia that produce cobalt, typically they require high-pressure acid leaching, and that comes with a price tag generally around about $1 billion or more, which is a big ask even for the biggest companies in the world. People do get a bit nervous about putting that sort of capital on the table. Our project, however, we can get at our cobalt with atmospheric pressure. So our capital bill from our 2017 scoping study was only $212 million. Right. So we think that's a better deal. And the other aspect about our project that makes it different, instead of being a nickel project with some cobalt credits, our project's actually a true cobalt project with 80% of the revenue forecast to come from cobalt with a little bit of nickel as a handy byproduct. So we're progressing a pre-feasibility study on the project together with our joint venture partner, and we're doing that against the cycle in terms of the commodity price movements. But already that pre-feasibility study is delivering some technical successes. We've got a new mineral resource. We're getting some really good metallurgy results. And I'm very confident, and indeed I've committed publicly, that we're going to deliver the pre-feasibility study before the year is out.
It sounds like a great story, Sean. So, look, swinging from the projects and the insight that you've given us today, what can investors look forward to over the next 6 months?
Look, we know investors are hungry for news flow. For investors to put their money into a junior exploration development company like Barra, they're going to want to see a return for that investment, and that return is going to be driven by increased interest in the company, and that's going to come from news flow. So we've got a new mineral resource that's due out in the next month or so for Burbank's North, and that'll then open up the opportunity for us to start investigating potential gold mining partnerships. We're going to deliver a pre-feasibility study for Mount Thirsty, and I've personally guaranteed out in the market that that's going to be done by the end of the calendar year. With any luck, that'll be into a rising commodity price environment. Certainly, when we look at the cobalt price, we think cobalt's been oversold, and we think that it's set for a rebound and a re-rate, and to be delivering news flow into that environment is where you want to be. We're talking to a number of big brothers around the place, and Mount Thirsty, despite being a low capex project, the product is actually quite a strategic product. A lot of big companies want to put their foot on cobalt, and we're talking to a lot of these big companies. But these big companies, they identify the pre-feasibility study as their minimum investment criteria. So, ideal world, pre-feasibility study, increasing cobalt prices, partnering up with a big brother. We think that could be a great outcome for Barra shareholders.
We've been speaking with Sean Gregory, Managing Director of Barra Resources Limited, BAR, on the Australian Stock Exchange. Sean, really appreciate your insights and your time today on Mining Tomorrow. Thanks, mate.
It's my pleasure, Ian. All the best.